Potential default in the US versus a potential default in the Eurozone, and what it means for the currency front is really that it's a matter of choosing between the lesser of two evils right now.
Good morning, Alishia. Yes, absolutely. We really don't know where to go at this stage of the game. There's a lot of uncertainty in the marketplace, and I think that's why your kind of risky assets remain under pressure, and your safe havens have come back into vogue. We see the gold price kind of at those record highs. We've seen equity markets tumble in. So a lot of uncertainty, a lot of jitteriness until we see more clarity as to this US debt situation, how the US authorities are going to play this one out. I think that's still the burning question. And as long as there's that uncertainty, I don't think there's going to be any firm directional trades being taking place.
Yep, but certainly not a risk-on environment that we're looking at. And, we've got this weaker dollar. It's across the board where every currency has benefited against the dollar, and the rand seeming to be standing out as an outperformer.
Yes, the rand has really outperformed over the past week. It lost a little bit of traction yesterday against some of its commodity-based currency peers. But in general, it has been, as you say, one of the star performers out there. And that is somewhat surprising. In a risk-off environment, you would tend to see the rand weakening probably more than most. But we have seen foreigners continue to buy in some of our bonds. We'll get a bit more colour about that when the Reserve Bank publishes its monetary figures tomorrow. But, we've seen these flows. Maybe there's some M&A activity taking place in the background. But we don't expect this rand to continue powering ahead so long as there's this uncertainty. Because even if we get through this kind of debt default situation in the States and Europe, we're still faced with a very sluggish global growth outlook. We've got fiscal tightening in the West, we've got monetary tightening in the East, and it doesn't bode well for global growth. And I think in that kind of scenario, emerging markets and risky assets in general could come under pressure due to that fairly dismal global growth prognosis.
Right now, that's exactly where the concern lies, in the fact that we're not seeing a strong inflow in terms of FDI, so that longer-term money flow is still being detracted while we've got hot money coming through, and we could well see a very quick unwinding come through here.
Well, absolutely. Remember, like I said earlier, I think the rand is kind of always at the forefront of the selling when risk is off, and for those exact reasons, we're still very dependent on these portfolio flows. Granted, there's been some very nice FDI flows more recently into South Africa, but the bulk of the flows, 100% agreed with you, is this portfolio hot money, and that can turn on a ticky and place the rand under substantial pressure.
What does this mean, in terms of global dynamic right now? Does all of this now trigger the beginning of currency wars? Because for now, before any of that potential unwind comes through, we've got emerging market currencies that are looking very strong.
Well, exactly. I mean, if we look at this dismal global growth outlook, emerging markets ultimately have to sell their products probably to these beleaguered countries. So, with the dollar being and the euro being relatively weak against these emerging market currencies, it doesn't help those emerging markets to wave off a global slowdown. So I think you're 100% right. The only thing left in the artillery is for currency depreciation, and we saw that quite vociferously last year coming through from Brazil, and we could see those voices once again coming back to the forefront, because absolutely these economies need to grow, and with the West being under pressure, it's going to be difficult for them to sustain any kind of export related growth.
We're already hearing noises of possible Japanese intervention yet again, where the yen has been strong. What are you making of the noises we're hearing on that front, and just the long-term effect of that moving forward?
Yes, I think we've seen, as you say, many times in the past, Bank of Japan coming to the aid of the Japanese exporter by intervening. I think this time around he might be a little bit more tolerant of a stronger yen, simply because Japan is going through this rebuilding phase. They need to import a lot of raw materials, etc., to rebuild from those twin disasters this year. But that won't be able to continue ad infinitum, because we know Japan is heavily dependent on its export sector. So yes, we could very well see at some point the Bank of Japan coming through. Possibly once again we could see a coordinated intervention from central banks, as we did earlier this year, when currencies kind of get out of kilter.